Good afternoon, everybody. Welcome to the reading of the Monetary Policy Statement for February 2024. I will begin by introducing myself. My name is Kenneth Egesa. I'm the Director, Communications Department, Bank of Uganda. Let me also introduce the team before you. I'll start with the Deputy Governor, Mr. Michael Atingi Ego, who's right in the middle of the table. On his left is Dr. Twinemanzi Tumugweine, who is the Executive Director, Supervision. And on his right is Dr. Adam Mugume, who is the Executive Director, Research. We are going to begin with the reading of the statement. I'll request the Deputy Governor to read the Monetary Policy Statement, after which there will be a question and answer session, which will take us up to 2, and then we'll have the Uganda translation thereafter. So members of the media, those who are watching on, who are joining us on virtual calls, you're most welcome. Without further ado, I'll request the Deputy Governor, Mr. Michael Atingi Ego, to read the Monetary Policy Statement. Deputy Governor, you're most welcome.
Thank you. Thank you, Kenneth. A very good afternoon to business and viewers. Welcome to the reading of the Monetary Policy Statement for the month of February 2024. On February 6, 2024, the Monetary Policy Committee, MPC, maintained the central bank rate, CBR, at 9.5%. The incoming data has broadly confirmed MPC's decision of December 2023's assessment of the inflation outlook. Both headline and core inflation rose in January 2024 to 0.4% from 2.6% and 2.3% in December 2023, respectively. However, inflationary pressures remain subdued, reflecting the continuing vanishing effect of the supply-side shocks, declining inflation around the world, and tight monetary and fiscal policies. In addition, improved domestic food supply at the back of favorable weather conditions has driven down food inflation. A favorable balance of payments and tight monetary policy have also helped to stabilize the exchange rate, and this has reduced stronger domestic inflationary pressures. The inflation forecasts have been revised up slightly in the short term, that is the 12-month horizon, in light of the relatively stronger exchange rate depreciation in the recent past, but are projected to remain below the medium-term target of 5%. Inflation is projected to stay around 3% through the first half of 2024, broadly reflecting stable demand conditions and the easing of global price pressures, which are expected to continue to flow through to domestic prices over time. Core inflation is projected to rise to between 4.5% to 5% in financial year 2024/25 and to remain around 5% in the medium term. Risks to the inflation outlook remain highly subject to changes in the global commodity prices and the global financial market developments.
Instability in the Middle East is creating new supply chain disruptions and the threats of higher oil prices. In addition, the risk of heightened volatility in the global financial and foreign exchange markets remain, which could reverberate in the domestic foreign exchange market. Indeed, the recent shilling movements against the US dollar are primarily driven by external factors and, if sustained, could result in higher inflation despite the easing of global inflation. Furthermore, renewed global supply disruptions could reverse global disinflation and delay the easing of monetary policies in advanced economies, leading to persistent portfolio outflows and exerting more depreciation pressures on the Uganda shilling. Economic growth continues to pick up, in part reflecting the waning drag on growth from the past tight monetary and fiscal policies. The recently released quarterly GDP by the Uganda Bureau of Statistics, UBOS, for the first quarter of financial year 2023-24 indicates a GDP growth of 5.3%, primarily driven by growth in household expenditure. The high-frequency indicators of economic activity for the month of December 2023 suggest continued economic growth recovery in financial year 2023-24, with growth projected at 6%, similar to the December 2023 projection. Economic growth in the outer years is projected in the range of 6.5% to 7%. Growth will continue to be supported by recovery in external demand, as well as the low inflationary environment, which has boosted a recovery in household real incomes, stimulating consumer spending. In addition, investment expenditures continues to be supported by the strengthening activity in the oil sector. Nonetheless, the growth output remains subject to downside risks stemming from global uncertainties, including slower than expected global and regional growth, a resurgence of supply chain distortions if the geopolitical tensions escalate and broaden, and a tighter fiscal policy, in part due to unfavorable global financial conditions, which could restrict government development expenditures. Furthermore, increasing government financing from the domestic banking sector could result in higher lending rates and crowd out the private sector from the credit market, thereby constraining household consumption and private sector investments. While the economy is evolving largely as projected in the December 2023 round of forecasts, considerable uncertainties remain. Overall, the risks to the outlook for inflation continue to be tilted on the upside. Therefore, the MPC decided that keeping the CBR unchanged was necessary to anchor inflation around the medium-term target. Consequently, the CBR was maintained at 9.5%, the bands on the CBR at +/-2 percentage points, and the margins on the CBR for rediscounts and bank rates at 3 and 4 percentage points, respectively. As a result, the rediscounts and the bank rates will remain at 12.5% and 13.5%, respectively. This monetary policy stance is consistent with the current assessment of inflation and the growth prospects and remains supportive of socio-economic transformation. Bank of Uganda monetary policy decisions will continue to be based on the incoming economic and financial data. There ends the reading of the monetary policy statement for the month of February 2024. Thank you for your kind attention.
Thank you very much, Deputy Governor, Mr. Michael Ating-Ego. We will now go straight into the question and answer session. We will first take questions from journalists in the room. Please raise your hand, and when you are called upon, introduce yourself and the media house you represent, and then present your question. Who's ready to go? You're still digesting the statement? Okay, we'll go online and see who's on with any question. I don't see any questions in the chat. Do you have any questions on YouTube? Okay. So there's a question from Richard Barunji. And the question is, what foreign exchange policies, if any, given the challenges of FX liquidity? So I'll repeat. What are the forex policy changes, if any, given the challenges of forex liquidity? There is also a comment from David Chaligonza, who says he missed the reading due to the sound quality. We will have the statement on the website immediately after here. So David, kindly go to our website to access the statement.
Thank you, Kenneth. So Richard, you asked the question. Let me just make sure that I get it correct. That what are the foreign policy changes, foreign exchange policy changes, if any, given the challenges of FX liquidity? Can you confirm that's the question? Okay. Let me begin by saying I'm not very sure what you mean by FX liquidity, the challenges in FX liquidity. I think the challenge that we have had that relates to FX is the drawdown of our FX reserves. That is the challenge that we've had. But in the market, you can go to the market right now. Your constraint is the Uganda shilling. And of course, the amounts, if you are purchasing more than $10,000, there are certain things you have to inform the agents about. But the FX liquidity out there is only constrained by the amount of Uganda shillings. So, but to address the challenges of the declining FX reserves, we have minimized our interventions on the sell side to the market. We last intervened in the foreign exchange market on the sell side in the first week of June 2022. To date, we have not sold any foreign currency to the market, largely because we are aware of the fact that our reserves were running low. And the reserves were running low because of the following. One, we normally build reserves by purchasing dollars which come in through portfolio inflows. But because of the inflationary environment in the advanced economies, the central banks of those economies began to raise interest rates and thereby reducing the risk appetite for the investors who are coming into our markets. So we saw a reversal. First of all, a reduction of the portfolio flows that were coming in, but was still a reduction, a withdrawal of the investment by these portfolio flows in our market, which resulted into a loss of foreign currency and also reducing the capacity to build foreign currency. So that largely explains why the FX reserves have come down, notwithstanding the fact that we have some heavy debt repayment obligations which are made through the central bank. So that is really the key challenge that we have had that is related to the foreign exchange issues, the rundown of the foreign exchange reserves. But because we have tightened monetary policy and the balance of payments has improved, we've managed to maintain relative stability of the exchange rate while ensuring that there's liquidity, FX liquidity in the market. So the key challenge we've had is a rundown in the FX reserves. But we are, of course, putting in place policy measures to rebuild those reserves. And we will make sure that we maintain the 4 months of import cover that we want to achieve for now, and then move to the EAC target of 4.5 months of import cover going forward. Thank you.
We have another one from David Chaligons from Nabat Rogadia, and it's similar to the one you have answered. So they say, we have recently seen signs of weakening of the shilling against the dollar. What is causing it, and what action is BOU taking? I'll read another one so that they can be taken together. This is from Ali Twaha, and the question is, how many SFIs have indicated a possible downgrade of their license as a result of higher minimum capital rules? Maybe we could take those and then come back for another round.
Okay. Thank you. I think you're right, because even in my statement, I did mention the fact that that we have recently had relatively strong exchange rate depreciation in the recent past, and that is contributed by a number of factors. But the main one is that there's a seasonality impact. Normally, in the quarter to the end of the calendar year, we see appreciation pressures on the currency. And these appreciation pressures are a result of increased remittances into our market from those in the diaspora, and also weakened demand for Forex by the various firms and what have you as we move into the Christmas season. But at the beginning of the calendar year, we normally see a depreciation in the currency, because after this, the holiday season, there's a resurgence in demand as activity picks up, and also there is a reduced inflow on account of the factors which led to the appreciation in the quarter ending the calendar year. So this is a seasonal factor. But of course, there are also some other factors beyond the seasonal factors. The demand has picked up largely by a number of the oil farms, energy and other energy companies, telecommunications, and it's also reflective of the fact that the manufacturing sector in Uganda is now demanding for more raw materials in order to finance their operations. So that partly explains why the currency has depreciated in the recent past. And there's the general strengthening of the dollar, particularly against currencies of emerging and frontier countries, which partly explains why we've seen a recent weakening. But the other thing that I want to emphasize is our exchange rate is market determined. It depends on the supply and the demand conditions. And the stability in the currency does not mean to say that the currency or the exchange rate should be fixed. I think the stability that we're talking here about is that the changes in the currency should not cause customers to make drastic decisions on their plans because the currency is changing. We are just minimizing those movements in a manner to allow the agents to continue with their business on a daily basis, but allowing the currency to be market determined. Thank you.
There was a second one on SFIs and minimum capital.
Thank you, Deputy Governor. I think the first thing we have to understand is banks are not downgrading because of the capital requirements. Banks are downgrading, at least the cases that we have been approached about, because one, there's been heightened competition, I think post-COVID. Two, a number of them have been reviewing their business models. And three, even the strategic direction and focus of the kind of customers they want to serve. So when a bank makes a business decision about which market it wants to enter or exit, or what customer niche it prefers to serve, and then as a consequence makes the determination that it's better, it can better serve those customers at a lower or higher tier, that is not because there was a capital increase or a higher capital requirement. It just happens to be a coincidence. And I think this is something that the central bank would like to provide clarification on, and we have seen the reports online to this effect. Thank you.
Okay, we will turn to the room. So if there are no questions, we will head into the translation and maybe finish earlier. Okay, since there are no questions online and there are no questions in the room, we'd like to bring the reading of the monetary policy statement for February 2024 to a close. We will then have the Luganda translation. Thank you very much, Mr. Mike Ating Ego, Dr. Adam Gume, and Dr. Tine Manzi.
Okay. Um, statement y'omumyuka wa gavana wa banka enkulu ya Uganda ekwata ku byensimbi ey'omwezi ogwekubiri omwaka 2024. Omumyuka gavana atangazizza nti akakiiko ke bayita Monetary Policy Committee kasazeewo okuleka akabonero ke twakazaako erinnya erya Central Bank Rate ku bitundu 9.5 buli 100. Kino kyongedde okukkaatiriza kye baali bateesezzaako mu mwezi ogw'Okubiri 2023, era ayongedde n'atangaaza nti okutwaliza wamu enkyukakyuka y'emiwendo gy'ebintu yeeyongedde okulinnya okutuuka ku bitundu 2.8 buli 100 okuva ku bitundu 2.6 buli 100 mu mwezi ogw'Okubiri. N'atangaaza nti wadde ogwo guli gutyo, tulabye nti okutwaliza wamu ebbugumu ery'enkyukakyuka y'emiwendo gy'ebintu lisinzidde lyeyongedde okukkakkana olw'okuba nti okutwaliza wamu ebbula ly'ebintu eryali ku katale lyalireetedde ensonga ez'enjawulo ng'obusambattuko bwali mu nsi ez'enjawulo ligenze likendeera. Enkyukakyuka y'emiwendo gy'ebintu mu nsi yonna naye egenze kkakkana, ate n'enteekateeka za gavumenti ne banka enkulu ez'ensi ezo nazo zeeyongedde okukendeereza ddala ku nkyukakyuka y'emiwendo gy'ebintu. N'ayongera n'atangaaza nti okutwalizaamu n'ebbeeyi y'emmere yeeyongedde okukkakkana olw'okuba nti twafuna obudde obulungi obwayongera obungi bw'emmere ku katale, ekyo ne kikkakkanya emiwendo gy'emmere. N'atangaaza nti ensuubulagana ya Uganda n'amawanga amalala oba mu lufuutifuuti gye twakazaako balance of payments awamu n'enkola ya banka enkulu ya Uganda nayo yayongera okulaba nti empanyisiganya ya siringi ya Uganda n'amawanga amalala nayo yali nga nzikakkamu ekyasobozesa enkyukakyuka y'emiwendo gy'ebintu okukkakkanira ddala. Be bakubyemu katooki mu maaso balabye nti enkyukakyuka y'emiwendo gy'ebintu be bagiteebereza emyezi 12 egijja mu maaso eyambuseeko katono olw'okuba nti siringi ya Uganda gino emyezi egiyise ebiri ebadde eserebyemu bw'ogigeraageranya n'amawanga gali gannaggwadda nga Amerika. Naye n'atangaaza nti wadde ng'ogwo guli gutyo tebalaba nti okutwaliza wamu enkyukakyuka y'emiwendo gy'ebintu ejja kukyuka nnyo mu mwaka guno ogwa 2024, era bateebereza nti ejja kuba ku bitundu 3 buli 100 mu kitundu ekisooka okuva mu January paka mu June, era tunagenda okumalako omwaka guno tunagenda okutandika omwaka ogw'ebyensimbi ogujja nga ekyali wansi w'ebitundu 5 buli 100. N'atangaaza nti naye obukonge obuyinza okwambusa enkyukakyuka y'emiwendo gy'ebintu eno bwesigamye kuba kw'ebyo ebitundibwa ebweru w'amawanga, ebitundibwa ebweru w'eggwanga awamu n'ebinaabeera mu butale bw'ensimbi mu mawanga gonna okutwaliza awamu. Neeyongera n'atangaaza nti tusandise okulaba nti obusambattuko mu Middle East nabwo buyinza okutabangula ebbeeyi y'amafuta. N'ayongeramu n'alaga nti okutwaliza awamu ebyo singa enkyukakyuka empanyisiganya ya ssente mu mawanga gali yeeyongera okukyuka ennyo, ekyo kiyinza okukosa empanyisiganya ya ssente mu Uganda okutwaliza awamu. Najja n'atangaaza nti emyezi egiyiseeko ebiri esiringi ya Uganda bwe gigeraganya n'amawanga amalala ebadde eyeeyongedde okuserebamu, naawe ensonga eziwerako nti obwetaavu bwa ddoola bweyongedde mu katale, ate era n'alambulula nti mubaddemu ne kye twayita nti ne sizoni yaazo olw'okuba nti twali tuvudde mu bakubakyeyo abaazireetanga mu Desemba, ate kakati tuzzeeyo nga n'abamakolero abazeetaaga. Bwe bakubye ettooki mu byenkulaakulana mu maaso balaze nti tulabye nti okutwaliza wamu ebyenkulaakulana bikulidde ku bitundu 5.3 buli 100 mu myezi gino 3 egiyise okusinziira ku UBOS, era n'akuba ne mutoki n'alaga nti ebyenfuna byeyongedde okwebbulula, era omwaka gw'ebyensimbi 2023-2024 gunaagenda otuggweramu nga tuli ku bitundu 6 buli 100. N'alaga nti mu myaka egijja mu maaso 2025, 2026, 2027 bateebereza nti ebyenfuna by'eggwanga bijja kuya ku bitundu 6 n'obutundutundu 5 buli 100 paka ku bitundu 7 paka bitundu 7 buli 100. Ebyenkulaakulana bino byesigamiziddwa kuba nti obwetaavu bw'ebintu by'ettunda mu mawanga amalala bijja kweyongera ate n'okukkakkanya enkyukakyuka y'emiwendo gy'ebintu okutwaliza awamu ekijja okwongera embavu mu ssente ze tusaasaanya ng'amaka ag'enjawulo ate n'ensaasaanya mu kusima amafuta ekyo nakyo kijja kweyongera okutwaliza awamu. Naye n'alaga nti enkulaakulana y'ensi zonna eyinza okukendeeramu bwe bakuba ttooki mu maaso alaga nti obukonge obuyinza okwesigamibwako buyinza okuva mu katale k'ensi yonna akayinza okukendeezaamu ku sipiidi y'ebyenkulaakulana. Obusambatuko obuli mu mawanga amalala buyinza okwongera ne buziŋŋamya entambula y'ebintu singa n'amawanga gali geeyongera okunywezaamu ku nsaasaanya y'ensimbi ekyo nakyo kiyinza okukosaamu engeri gye tusaasaanya mu ggwanga lyattu lino Uganda nekyeyongera okulaga nti kikendeezaamu ku byenfuna eby'eggwanga. Era omumyuka wa gavana n'amaliriza ng'agamba nti okusinziira ku ebyo byonna ebimenyeddwa waggulu basazeewo baleke akabonero ke twakazaako eya Central Bank Rate ku bitundu 9 n'obutundutundu 5 buli 100 era n'alaga nti bino byonna bikoleddwa okwongera okuwagira enkyukakyuka ey'omuggundu mu byenfuna era enteekateeka eno ejja kwongerwamu amaanyi okusinziira ku bwino anaaba akuŋŋaanyiziddwa ku byenfuna n'ebyenkulaakulana mu ggwanga lyattu Uganda. Byebyo mu bufunze omumyuka wa gavana byayogeddeko mu statement eno.